Hey, it's Mike Lynch with AmeriFirst Financial, and it's Monday morning, time for your Monday morning mortgage update for the week of June the 11th. Hope everybody had a fantastic weekend. The heat's coming. I think it's going to be 112, 115 today in Reading. So hope everybody's drinking a lot of water and getting some air conditioning and taking care of yourself. So last week, I missed you guys. I wasn't here. I was celebrating my 25th wedding anniversary with my best friend, love of my life, Gail. It's the first time we've actually taken some time off during our anniversary in 25 years. When you get married on July 4th, one thing that you need to realize is that it's a lot of family time. So we always spend a lot of time with family and friends on that weekend, but had a blessed weekend and so grateful. So let's talk about last week and what's happening this week. Last week, we saw a 75 basis point sell-off in the bond market. So that means money flowed out of that bond market. Mortgage rates went up 75 basis points. Ironically, the week before that was a 75 basis point improvement in the bond market, which means rates went down. But in the last 2 weeks, ended the rates flat, no change. So what are we looking at this week? The three things: inflation, the Fed, and some important data that's coming out. And then a report by Redfin that talks about reduction in list prices. So let's talk about inflation. Two big reports coming out this week: Consumer Price Index, CPI. PPI is the Producers Price Index. CPI is Wednesday, PPI is Thursday. It's going to show inflation's up. Inflation's bad for rates. We expect rates to get worse this week. Straightforward. Fed. The Fed is talking today. All the Fed members, today is their last day that they can talk, 2 weeks before the next Fed meeting, which is in 2 weeks. They have to be quiet. They can't talk about policy and what the Fed's doing. So we're going to be listening today to the Fed members. What is their position on another increase in the Fed fund rate? We know that the Fed has increased the Fed fund rate 0.25% on the second meeting this year, then the 0.5%, then 0.75%, 1.5% increase since the beginning of this year. Some people are pushing for another 75% increase. Some say 0.5 point is going to be good enough. So what are they going to say? And why is this good? Why is it bad? Well, this is the primary way the Fed fights inflation. If they can increase that Fed fund rate, they're going to fight inflation. Inflation is going to come down. In fact, there's some indication that we may be approaching a peak because it's not rising as fast as it has been. We're not there yet. A lot of speculation, but maybe this is working. And we want to know if the Fed's really has the gumption to keep this up and fight that inflation. The concern on the other side of it is it's leading us into a recession. And short term, that means it's going to get harder. Long term, it's better for mortgage rates, better for people buying homes and getting better rates. So again, we'll be listening to the Fed. The other few things that are coming out, the Fannie Mae and Freddie Mac are buying 30-year mortgage MBS mortgage bonds this week. And also the Fed is there going to be an appetite to do that? Is there going to be a reduction in the amount of mortgage-backed securities they want to buy? Also, the Fed's selling. The Fed is selling. They're selling 10-year notes, 30-year bonds. It's the way they raise money. Is there going to be an appetite for those? If there's a big appetite for 30-year bonds or 10-year notes, that's actually good for pricing and rates get down. But there hasn't been a big appetite in the last few months. So we've seen a lot of market shift, a lot of rate volatility leading right after these auctions. So Wednesday and Thursday are going to be some big days, a lot of volatility on Wednesday and Thursday for all the reasons I've talked about. And then Friday, retail sales, consumer price index coming out. Are people buying things? Do consumers think the economy is doing better? Those numbers have not been good over the last few months. And if they continue to look this way, that doesn't bode well for the economy. So last thing, Redfin came out with a report today that said listing prices are coming down. And there's going to be a lot of misinformation about this. And I want to give you some insight on how to interpret this, because as real estate agents and as lenders, we have to interpret the information that our clients are getting. And they're getting a ton of it: headlines, stuff in the media, misrepresentation of what the numbers look like. So when Redfin reports that listing prices are coming down, you can think of all the concern and the fear that people have. Are prices coming down? Can I not sell my house that much? Am I going to lose equity? Things like this. But let's look at how these compare to a year ago. And these numbers are 4 weeks before July 5th. So they include June 15th, and that day was the highest interest rates we've seen in the last couple years. So it includes a very high interest rate environment. So this report, let's look at some of the four key areas of this. Selling above asking price. This is what Redfin reported. Current 52% of the homes sold above asking price. A year ago, when rates were significantly better, 53% of the homes sold above asking price. So there's not much of a change here. The average percent of price sold above asking. So the average amount that was sold above asking, 1.9% currently, 2.2% a year ago. Not a big change. Accepted offer within the first 2 weeks, 48% currently, 49% a year ago. And 32% of the homes are seeing their offers accepted within 1 week. These are very strong numbers. The average listing to contract time, 18 days and 18 days a year ago. Now, look, we can't expect these numbers to probably continue. We know that we're in the middle of a correction, but what it's showing us is that this isn't doom and gloom, that we're probably headed into a more normal market. Are we going to appreciate 20% in the next year? No, probably not. Nobody thinks that. But even single digit appreciation, which has been the estimate, a lot of wealth is created in single digit appreciation markets. So again, when we talk about those borrowers that say, hey, I missed the boat, or the sellers, I missed the boat, they need to realize that those numbers aren't bad. These numbers are strong, and we expect the housing market to continue to be strong. So if you have any questions, or if your clients have any questions about locking, please give me a call. If you know somebody that can benefit from this video, please forward it. And one last thing, what's our position for this week? Locking. We're not playing any games with our clients' money. A lot of volatility this week. A higher probability of rates going up than coming down. Hope you have a great, productive week, and I'll talk to you next week. Bye-bye.